Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Gonna hit new turf today, NeoTerra. I love it. I mean, this is where I love the cutting edge, the pre-first product, the pre-MVP, right? All of that. And that's what we're hitting with Chris Piedmonte today. So I was really excited to hear this episode.
Yeah, honestly, I didn't even know what NeoTerra meant until he told me during the podcast, new territory. And he's in Inception fund, meaning that napkins, notepads, early stage, which I think is fairly rare, even more so nowadays. Most VCs, they have a X amount of ARR you have to have, or this kind of, traction, or, Chris seems to feel there is a real opportunity, a new territory, not just from a company or issue standpoint, but from a country standpoint. He's leading into a lot of countries that, been around for thousands and thousands of years, but are not really getting the opportunities that they've gotten, that the US, Europe, and other countries have.
Absolutely. Yeah. I was really fascinated by his background here. And he's Austin based. He's a special purpose investment vehicle and startup mentoring firm. So he adds mentoring onto it, and he's focused on this formation stage ventures in a variety of industries and markets. He's currently mentoring several startups in various stages of development by leading investments, consulting on strategy, and serving on their corporate or advisory boards, as well as taking fractional executive roles to fill skills gap in the companies he's mentoring until appropriate hires can be made. So he's got quite the job worked out for himself in addition to that, right? It's not as passive investing as many of the other funds. And that may explain exactly why he's so interested in this new territory.
Absolutely.
All right, let's listen to the episode with Chris Piedmonte from NeoTerra Capital.
Well, everybody, my name is Scott Kelly. I am the founder of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm excited to interview my friend Chris Piedmonte from NeoTerra Capital. Chris, welcome to the show.
Thanks, Scott. It's great to be here.
So, Chris, before we get into what you're doing with your fund and your thesis and such, give us all a little bit of background about your prior work experience, what you did before NeoTerra.
Okay, yeah, happy to. Obviously, I've been around a while. My career actually goes back to the 80s. I've been in technology most of my career, always in startups. First with a company that developed some technology in the mailing and shipping area. We actually automated the U.S. Postal Service. That was my first startup that I participated in. And really, I got the bug for doing entrepreneurial things while working there, and see how we went from a small little company to doing what today's dollars would be hundreds of millions in revenue. So that was very exciting. After that, I did launch my own startup. We actually developed products for other companies, and we would work with other startups, occasionally larger firms. I've done work for Honda and AT&T, Countrywide Mortgage when they were still around, and others, where we built products for them, both SaaS type products and back in the day applications to run on PCs as well. And I did that for well over a decade before my last startup, which was in the data space. And we developed some unique data processing technology at a company that had a considerable number of patents, which I got to develop myself and with my team. And we're fairly successful at getting the tech working and getting it out into the market. I started down the investment path and the mentoring path about 2012. So it's been about 12, 13 years now that I've actually been doing that. And NeoTerra itself is relatively new. We've been around for a few years.
So talk about NeoTerra. Talk about, kind of how you're investing, what you're investing in, and, maybe a little bit about the fund's thesis.
Yeah, happy to. So NeoTerra, we're a little bit different. In fact, I had some trouble putting a label on us. People talk about seed and pre-seed, and when you look at where those, company stages are and where companies are when you call them seed or pre-seed, many of them already have products, they have customers, they're in their revenue, they've established their business and their model, and they're now entering quite frankly, a growth phase. That is, for me, not the exciting part. I like being in really early. I like sitting down with a team that has, ideas, maybe a prototype, and the name NeoTerra actually summarizes that. It's new territory. We look for things that are new. So the label we've had to put on ourselves is either an Inception fund or a formation fund or, something along those lines because of the stage that we're at. My thesis is basically that opportunities are always in the new. Big opportunities are always in the new. It's at the inflection points of technologies or markets or how business gets done. And that's what we look for. We look for new technologies that are being developed that will create new markets. We look for new ways of doing business that weren't possible before because of changes in, it could be technology, but it doesn't have to be. It could be regulatory requirements. It could be, changes in demographics or populations that establish markets as well. And sometimes it's geography. Quite frankly, Africa is emerging as a major, potential for investment. And there are a lot of things going on over there that we've looked at, as well as in South America and even Southeast Asia. So
that's awesome. So when you're an Inception founder, Inception investor. So obviously you're a new technology, new frontiers, new geography. Let's talk about, because when you're very early, I think we both would agree, the founders have a big impact on the success, going forward. So talk about who are the types of founders, or what are the attributes of the founders that you invested at NeoTerra?
Yeah, that is actually a great question. One of the challenges with investing in that stage is you have no proof of market, right? You have no way to test a product or test a market. So it comes down to, a number of things. And the founders certainly are a major component of that. Characteristics that I look for when I'm looking for a founder, one is just the passion. They have to be driven. This has to be a major component of their life as far as what they're doing. Being an entrepreneur is hard. Things go wrong. Things take longer. Things are challenging. If you are not passionate and dedicated to what you're doing, the chances of success, quite frankly, are low. And occasionally I've had, what I thought was a passionate person turn out not to be. And when things got tough, they exited. So that's one thing. Integrity is important. The ability to be optimistic and to convey what you're doing and understand, how to approach the market and your products and things like that with optimism is important, but not, I guess I don't want to use the word, but I'm going to, delusional. You can't be living in a fantasy world. You can't have expectations that go beyond what are practical. And that's a delicate line. And it's difficult to find people generally that fall into that, but it's one of the major requirements. There are others, but those two, I think above all, are the things that make me look at a founder and say, this guy or this woman will make it.
Yeah, I'm glad you said that because, you and I speak to literally hundreds of founders in a given year. And, I like enthusiasm with pragmatism, confidence with humility. And, the reality is it does, especially at this early stage, it takes, it's all about the founder. And I think we can both agree on that. So since you launched NeoTerra, tell me about some of the interesting companies you've been involved in, maybe some success stories, or maybe delve in a little bit more about some of these new frontiers that you're looking at.
Yeah, that's a lot of territory. Let me see how much of it I can address. So we don't have any particular vertical market. So I can't say that we specialize in SaaS or enterprise or even consumer products. But there are some things that we've been working on that we're happy about. Interesting enough, we've got a lot going on in medical, which was not something we had originally targeted. But we've funded some companies that have done work with medical devices and with a number of other medical applications. That includes a company called RMR Ortho, which does a nitinol orthopedic staple that's superior in the market because of the unique metal alloys and how they produce the staples. We work with a company called Tarka out of Calgary in Canada. We obviously invest outside the U.S. Tarka is developing a adjustable composite material seating for people who spend a lot of time in wheelchairs, and it definitely works to improve their posture, reduce the problems they have with pressure sores and other things. It's particularly designed for active people too, which most people don't consider that people in wheelchairs can be active, but they can be. They play sports. They do many things. So I'm very excited about that one, and there have been others as well. We're looking at companies in AI, of course, applications in human resources and drug discovery and a number of other areas. There are some traditional SaaS platforms. We've got some stuff that's coming out of some of the new approaches to real estate and some things that we're playing with as well. So it's quite a variety. As far as successes are concerned, we're early. So, I can't point to any major exits. Let's talk about that maybe next year or the year after. Sure. But many of them are going quite well, and we're quite happy with the progress they did.
I want to go back to what you mentioned about your focus on Africa. Talk about why Africa and where you see the opportunities there.
Yeah, in many ways, there are similarities between where some of the African states are and where India was maybe 30, 35 years ago. They have, populations that are bright, capable, competent people. And the emergence of the internet and technology and, the service businesses now that can be conducted because of the internet opens up those populations, to be able to provide goods and services that they wouldn't previously. So we've been looking at a number of startups. Some of them based in places like Ghana and Kenya and South Africa and Nigeria that are working to provide goods and services in the local areas that are now enabled because of technology. Many of these are services, sometimes around food delivery or in some cases security, other cases financial transactions. And the population there, as I said, bright, capable people that, can develop truly, world-class enterprises. And, so we've been looking at ventures out of Africa as well.
Yeah, it's interesting that because, for years I always, actually my sister lives off the coast of South Africa in Mauritius and spends a lot of time in South Africa. And I've been there a couple of times myself. And, originally Africa was seen as this vast, untapped natural resources. And I'm glad you really said, okay, there's talent resources, that are prevalent there too. So, I appreciate that insight. Let's kind of pivot a little bit. Let's talk about the current fund. What the structure is going to be like. Talk about who your ideal LPs are, who you're investing with, where you're finding deal flow. Let's talk about the fund itself.
Okay. All right. That's a lot. Once again, let me see how much I can remember.
Unpack as needed.
as needed. All right. So first of all, as we are fairly new, we are actually raising our first true fund right now. The intention is to put together a $50 million fund. Targeting approximately 30 to 50 ventures. So initially, small checks. And that's appropriate for the size that we're at. As far as who makes a good LP for us, primarily we're talking about high net worth individuals and family offices in most cases. The approach I take and the conversations we have are generally about not making a major investment per se in NeoTerra's first fund, but some small component of their net worth, 1%, 2%, something like that. Enough that if we succeed, and by the way, our returns, if we're successful, should be above average because of the stages that we're working at, and some of the things, several of the things we're working on should have 10x plus multiples on exit. So the hope is that a small amount of money from their perspective is not an unnecessary or unprudent risk, but the returns could be substantial, perhaps contributing 20, 30% to their returns for the year on any particular fund. So that's generally who our target is as far as the investors are concerned. The ventures, as I mentioned, as long as they have that component of the new, as long as there's something that can be leveraged that can result in a sizable venture. We don't do stuff that exits at 10 million or 20 million. We're 9-10 digit swing for the fences type of deals here. As long as they have that component, that is the types of deals we would be targeting. Fund structure is still somewhat up for debate. I do not want to do the standard 220. I think that's abusive, quite frankly, and I don't think it's necessary, particularly for an emerging manager in a first fund. So, we've been kicking around a 110 or some other, variants of that here. It's going to come down to some conversations we're having right now with some family offices and what they feel is appropriate. So that's still somewhat under discussion. Intention, quite frankly, is probably to raise and close that fund maybe by first quarter of next year. It's not, we're not rushing through it. I want to find the right investors, the ones that, believe that you can, start with an idea and a couple of bright people and achieve it. And in many cases, that will be people that have done that themselves.
So yeah, as most of our listeners know, we launched this podcast to give emerging managers an opportunity to expose themselves to a larger network than some of the monoliths that are out there. And part of that is the value add that the managers can provide for the fund and for the founders. Talk about writing a check is obviously, relatively speaking, the easy part. What are the value adds can you provide, to the founders that you're investing in?
Yeah, that's a great question, and one that I think is important, particularly at this stage. A lot of times, the people we're dealing with, it's their first outing, so they don't know a lot. Or maybe it's not. Maybe it's their second or third, but they're doing something they hadn't done before. I'm working with one right now that originally was in the medical device space, is now doing a food play. So, there are some things where they have blind spots. The advantage of working with us is multifold. First of all, we're all a little bit older, so we're a little bit more experienced. The team is in their 50s and 60s. We've been around a while. We have a variety of backgrounds. I mean, mine has been technical and leadership for most of my career. But, Wade Allen, who's with us, is a specialist in team building and HR and structure. We have, James, who's with us, MedTech, whose primary expertise is in finance and marketing and can contribute greatly to financial planning and how to develop a go-to-market strategy. We have some associates that have specialized in finance and legal as well. So one of the advantages of working with us is you have a team of people here that have worked in most of the aspects of startups: leadership, engineering, finance, marketing, operations, HR, all there. So we can provide a lot of guidance and a lot of advice. The other advantage is, since we've been around a while, we tend to have fairly sizable networks. I've occasionally have said sometimes the only value I can bring is I know a guy. But sometimes that can be all the difference. Getting to the right people, getting the right relationships established, opening doors for finance, for early business opportunities, for advisors, board membership can be tremendously helpful. And we can do that here at NeoTerra.
And I'm glad you mentioned that, because the reality is, that for these emerging funds, we found historically, although they're not getting the exposure or the LP, allocations of the larger funds, they're generally better alpha because they're more actively involved in the success, of these entrepreneurs. And so I appreciate that. So I like to, obviously there is roughly 3,200 venture capital funds out there growing, on an ongoing basis. And I always like to pose this question to our guests: is why your fund and why now?
Well, I think why our fund is because we're going to provide access to some pretty unique opportunity. They are opportunities that have those possibilities of those very large multiples, very large exits. We will be doing enough of them that the fund itself will have a good overall return. Our other thing I would point out is our diligence is quite extensive. We don't do fly-by due diligence. We examine, the markets. We get an understanding of the issues that the startup is trying to address. We look at whether their products or services will properly address those issues and that they have the appropriate financial modeling and strategy. We look to ensure that they've tested their thesis themselves with potential customers and obviously the people. We do deep evaluation on the people. I'll have perhaps maybe even a dozen meetings sometimes before we decide whether or not we're going to engage with someone. So the diligence is thorough. And I think because of that, we're seeing a much higher success rate. I've also done some angel work as well. I helped start the angel group at my college, the Rose-Hulman Institute of Technology. And of all the deals we've started there, most of them are still operating, several doing quite well. And I think it's because of a similar attitude, deep diligence and the support that they got, from the angels, both in terms of introductions and mentoring, made a significant difference. And we're continuing to do that here at NeoTerra.
Awesome. Last question, and this is really an open season for anything you want to mention. So what other tips, ideas, anything else final thoughts you want to share with our listeners today?
First of all, if I'm talking to founders, my advice to you is fully engage in what you're doing. I occasionally come across founders that are trying to do it moonlighting or doing it part-time. Starting a venture is not a part-time gig. It is a full-time plus endeavor. So my usual advice is quit your job. Get out of everything else you're doing and focus on this. If you can't do that or don't want to do that, you shouldn't be pursuing this entrepreneurial venture. It requires that type of attention. Second, don't go alone. Building companies is a team sport. Find people that complement your skill set. Find people that have opposing thoughts to yours and have discussions with them. Make sure that you engage with your potential customers and your partners and have discussions about what you're doing. Look for that enthusiasm, from the market to be sure that you have something that's going to work. That's certainly the advice I would have for founders. For investors, for those that are looking at our fund or someone else's or angels looking to invest in deals, obviously a lot of the criteria I talked about for the ventures applies to us as well. Is the team passionate about what they do? Do they have the skills? Have they been, in our case, executing well on previous deals? Do they have what it takes to be successful? Spend the time to get to know the people you're investing with. You'd say, in many cases, a sizable commitment. It's a long-term commitment. Especially at the stage we're at, you're going to be working with us for, from a founder's perspective, maybe a decade. Same thing from an investor's perspective. It will be a while to develop and exits on some of these opportunities. So, that is what I would advise people to do. Founders, full commitment. Investors, deep due diligence, understand who you're working with, what their thesis is, and whether or not it aligns with your own particular interests and goals.
Fantastic. So, Chris, where can people learn more about NeoTerra and get in contact with yourself?
Well, that's pretty easy. Our website is neoterra.capital. We're fairly easy to find. You can always connect and find me on LinkedIn. Happy to talk to anyone that has an interest in what we're doing, whether it's as a founder who's looking for capital and some mentoring, as a limited partner who's looking for their next investment, or just someone who wants some advice and or could use some help locating someone or working through an idea. Happy to chat with anybody who wants to reach out.
So for those listening today, make sure you subscribe, like, comment, share our interview with Chris today. And Chris, thank you so much for being on the show today.
Hey, Scott, I really appreciate the opportunity.
I think, Scott, the thing that really fascinated me was this idea of diverse perspectives. Because so often when you are in that early stage, you have no choice but to go it alone. And I think that a lot of the companies that do intervene at the early stage tend to turn them into I don't know how to explain it, right? Yeah. It's like, we can funnel you into, this accelerator, but everybody else comes out with the same business model, or they come, it's too programmatic. So he's doing something really different here by taking a look at this and trying to bring these diverse perspectives so that it could really become the best that it could be.
Yeah. Venture for a lot of years has become very formulaic, from these accelerators and some of the famous companies that are well known in that space. I won't name names. But you're right. He comes in from this perspective. Okay, I'm coming in early. I'm not coming in early to change you. I'm coming on early to mentor you, encourage you, and help you get to where you want to go. And I think that's, for new entrepreneurs, that's invaluable. Because the reality is some of them are just working on a dream, an idea. So many of them can't get past that stage because they don't have someone to help them get past that stage.
Right. Either they get stuck and they can't get past that stage and it's still on the napkin, as you put it earlier, right? It really is still on there. They can't get to that next, or they go down a path that homogenizes it too much that it now becomes no longer so special or unique. And it gets harder and harder to get investment for it at that stage, right? And so that's the two paths. I see it really often because, I used to give a lot of speeches to inventor groups. And I cannot tell you how long, the most common person to walk up to me and say something to me was usually someone who'd been at the same idea for well over 2 years, easily, right? You know that because you do the same thing talking to those inventor groups. And then when you get into the software side, it's like they abandon it so quickly when it was a great idea.
There's a lot of great ideas. You can go to any university and there are literally thousands of patents that have been generated by university professors and students that are just sitting on the wall at the university or in a drawer, and they didn't get past the idea or dream stage. And so it's really important to have people and the right people to give you the bump, from that early standpoint.
And I think that bump is what, Chris was talking about here is like, it also is this idea that we're not just rah, rah, this is so great. We're also disagreeing. We're also talking about the challenges, taking them seriously, because if you don't do that, it does not turn into something that's viable.
Well, and that's obviously part of his strategy. He's swinging for the fences. He wants that 10x return, and you have to be early to get that. Yeah. But you have to be proactive to get that too. And so it really takes not just capital, but it takes time. And like our previous interview with Rob, it takes some patience.
Well, and he has a lower fee structure. That really was the one that shocked me, because typically anyone I've ever seen do early stage was like, I'm taking all the risk. And then they take this giant piece to actually what really happens on the upside of it, if it makes it through that process, is that the future investment becomes not possible because the structure's so bad. So he's cognizant of that I'm going to scale it to here. So the fee structure has to be aligned with that. I was really impressed by Chris Piedmonte. I just thought this was such a good mindset.
Yeah. And he's obviously, from new territory isn't just a stage, it's a location. He's looking at Southeast Asia, Africa, right. Places where my sister lives off the coast of South Africa, and I've been there a couple of times. And some of these countries have nothing but amazing resources that have not been fully, taken advantage of yet. And I think, being early geographically is very important. And, we have another interview coming up with an associate of our previous interview that's going to be leaning into what's going on in India. So we're not just looking at the great things happening here in the U.S., because they happen everywhere. And
that's right.
They happen in these new territories.
Wonderful. Well, I'm looking forward to more new territory in Emerging Managers Podcast. Don't forget to go to the blog post for this episode at emergingmanagerspodcast.com and check out everything Chris Piedmonte and NeoTerra Capital has to offer.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.